Good afternoon, this is Robin Bieber on the European Midday Roundup and Good Morning America Chart Talk on the 21st of July at 12 o'clock in the morning London time. The chart in front of us is set Brent 60-minute, more of that in a minute. There's no question that the market is attempting to break out of a 6-week range. We mentioned earlier this morning about the pent-up energy which to the upside. Well, this is coming through right now and we're surging higher. We put on $1 a barrel from the rather quiet start to the morning, and then 3 hours ago we leapt almost $1 a barrel. It's very strong. It's probably too much too soon, but that's not a very good reason to get short, because when you're breaking out of a 6-week range, the upside could be vicious, and so bears should probably hibernate. Now, here we have the RBOB 60-minute chart, and it's got the bit between the teeth and seemingly wishes to push on and higher. The key now is holding on to these gains. Too much too soon. You could argue too much too soon after the rally on last night, but nevertheless, we're pushing on and it's very strong. We've broken up above the short-term moving averages, the 5, 8 and 13s. We did that to a large extent last night, and they provided the springboard, as the short-term moving averages do in a range, to range resistance, and now we're breaking higher above the range resistances. So let's have a look at WTI and then each contract on its own. Here we have the breakup. The anticipation was, as soon as we broke above the short-term moving averages and we closed above them last night, that it would make its way to 41.72. Well, it's more than done that, and it's now making its way to 42.49, the gap. That's the target. If we move and close over 42.49, we'll be looking for a move to the continuation 200-day moving average, the equivalent of this green line here, at 43.26. We must not, to maintain the strength, we must not close below 41.72. If we did, it's not a disaster, but ideally we should not close back below the 5-day moving average, which will come in around 41.10. The stochastic is moving positive, and there is upside now to this 42.49 level whilst we're above 41.72. Brent is virtually the same. It's pushing on higher. You can see there's not a winning short in the game here now, and that's probably true on almost every contract. It's pushed up. It's printing 44.55. It has a target to 45.18, a gap in the continuation gap zone, valid whilst it stays over 43.97. So if we're over 43.97, the target is to 45.18, and the 45.18 level is here. There it is, the top of the gap zone. If we were to close over 45.18, we're in another world, and we're beginning to break seriously. We're already breaking seriously to the upside, but we're in a market which could easily go a lot higher, and would start off with a target to 45.86, the continuation point. The correction point here, the 50% correction point. So 45.86 is the target on moving over 45.18. Heat has exploded north. It's hit not only 124.25, but also 125.34. It's well above there. It now has a target to 128.66, valid whilst we're above 125.34. And if there's a pullback, which seems quite likely given the speed of the move higher, we must not close back below 125.34, or we're back in that range. RBOB, trying to punch higher. It needs to get over 126.60 to 126.80. It's made a high at 127.33. It's above the 126.80 at 127.27. And so long as we stay over 126.80, this correction point here, we're off higher, probably to 135.48. Oh no, we will not be going to 135.48. We may get there, but actually it's the 200-day moving average at 130.10. So if we stay over 126.80, the odds are a move to 130.10, the 200-day moving average. RBOB has not staged a phenomenal breakout, but by being over 126.80, it's in the process of breaking out, and it's trying to move higher, but it hasn't made new highs, for example, of the last 6 weeks. But it's doing well, and it must stay over 126.80 to keep the momentum going. Gasol has hit its range high at 375.25, and whilst it's over here, has a target to 388.25. It along with the rest is breaking higher. So the stage is set for higher numbers. The momentum is there. It's probably too much too soon, but getting short on the back of that is high risk and not recommended, particularly when we're breaking out of a 6-week range, which means that the momentum and power of this move higher should be up towards the extreme level. We must not close back below the key pivot points that now have green lighted this next leg higher. And these key pivot points, just to remind you, on WTI, there is 41.72, Brent 43.97, Heat 125.34, RBOB 126.80, and gas oil 375.25. Now structure is, we just have a quick look at the structure on Brent and the front two spreads on Brent looking stable. No more than that. They're up and pushing up against resistance, but they can stay in this condition and the market still push on higher. WTI is performing a little bit better. It's breaking out to the north on both the front contracts, the SEPOC and the OPNOV. They look like they're going to go higher. They're testing the recent highs. The DEC red DEC, which you would expect to be very flat price sensitive, printing 118, that's the high of 4 days ago. If it breaks over 118, it's making its way back to 46 likely, providing it holds these short-term moving average, which seem likely at the moment, although the hourly chart's suggesting a bit too much too soon. And the DEC red DEC on Brent in the same condition, the highs of 4 days ago at 198, it's printing -2, its high is 199. It needs to get over 198 to give it a target to -152. So the poor man's flat price, if you like, which is what the DEC reds are conforming with the flat price, and they now need just to push on higher a bit to have targets above the market. The market's staging a breakout. It's got to hold on to these gains, and if it does, we're in for a higher market over the next day or two. That's all for today, folks. Good luck, good trading, and bon appetit.